Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Forecast Update Live, a new video program from Ever.Ag Insights, where each month we will gather to discuss our latest dairy market forecasts. I'm your host, Phil Plord. Very exciting day. We're offering a brand new look for the forecast update, and we're bringing in additional voices, additional markets to forecast, and this new show. We're really lucky today to have three people well-versed in the ways of dairy markets: Erica Medke, Matt Gould, and John Spainhauer. So let's start with this today. Our forecasts have evolved slightly from last month. Just from a high level, Class 3 milk, our call for 2023 is now at about 1870 per hundredweight. That's down from 1925 a month ago, mostly reflecting some lower barrel prices than we anticipated. And when it comes to Class 4, we're just over $20 for our 2023 forecast. That's down about 30 cents from where we were a month ago. That's a lot of just sort of timing and noise, not a major change. So we feel that the bottom is probably in for Class 4, either February, March kind of area. Class 3, there's still maybe a little bit of downside. Depends what angle you take a look at it from. But no major changes on the Class 4 side and thoughts of a bottom. Class 3, a little call for lower. What we're going to do here each month is we're going to have one of our guests speak from the bullish perspective and offer some of the factors leading us to believe that prices could be higher. And someone's going to take the opposite view from the bear camp. This month, Matt Gould is going to be talking the bullish perspective. And Matt, what do you see out there that has you thinking that prices have bottomed in the Class 4 space and maybe there are higher prices ahead?
Yeah, I think in my conversations, the focus is all about China. We went from a China that was closed, that had these draconian policies as we were headed into the fourth quarter, shut down in many cities and folks locked in. Then in early December, we had this reversal of a policy. COVID declared, I guess, over, at least from a policy standpoint. The country's going to reopen. They're going to be easing monetary policy, incentivizing investment, incentivizing return to manufacturing and exporting. And we've just exited, as of the 5th, the Chinese Lunar New Year and holidays. So as we sit today, China is full tilt open and markets are trying to digest what does that mean for product prices. From my perspective, it's hard to be bearish when we have China at full throttle. Folks are out exploring the world, getting together, being with families, going out to eat, spending. And so as a result of that, our forecast has us forecasting a market bottom, particularly on the powder prices, as we're seeing a return to global demand driven by a strong China. Now, something to point out is that with China weak, we saw global trade drop because the giant in the room just wasn't buying aggressively. We're now on the other side of that, where we have an aggressive China, at least that's what we believe we will be seeing, an aggressive China in the marketplace, which is going to absorb the additional milk supply that we've seen out of Europe and elsewhere.
So Matt, I get that, and when China moves, it moves big usually, and clearly the volumes have been way down. But one of the things I find really interesting is that milk production in China is quite strong. And if you look at it, 2019 to today, domestic milk production is up about 31% in 2022 versus 2019. So it's like when we came back from COVID, all of a sudden we have a lot more milk in China. How does that factor into the mix from your perspective?
The China milk supply story and milk growth story is certainly important. We've seen China succeed at building these very large dairy farms, and that is translating into substantial gains in their local milk supply. Now, over the last year, one of the things that happened with China having an abundant supply of milk is that their milk prices relative to our milk prices started to close. That gap started to close because milk was abundant. One of the things that we're seeing now, which is a shift in that, it's a change in the dynamic, is that we're again seeing a widening out where Chinese milk prices are starting to become more expensive relative to imports. And as a result, I think even though there is milk supply growth in China, that isn't going to be the more important side of the story. This return to demand, which is, I think, in part driving those price changes, that'll result in a return of China to the global dairy market.
All right, Erica. From the bear camp, thinking about why we might not want to be so excited about milk prices going forward, what would be the best argument for that?
Well, honestly, milk supply is really the biggest bear in the room. And to lead off of what Matt had said, if China's got abundant milk supplies, let's think about the big three in terms of the global players of milk supply. So, New Zealand, while they didn't have a great start to the season, for the rest of their season, they are looking in pretty good shape. So, the North Island has got really good moisture and pasture, we hear. So, they're going to be a force for the rest of the season. Europe, I would say, is probably the biggest driver of growth lately. We've seen big numbers come out of Germany, very economically minded dairy farmers there. They've got good pay prices and they're making milk. We hear in the Netherlands that producers there are also keeping cows as they look ahead to potential regulations and buyouts from the government. You look at Poland too, a lot of good milk supply there. Back home in the United States, while our numbers aren't double digits, we're certainly not going to be hitting 2% milk production growth anytime in the near future. Positive is still positive. And as you look at that compared to demand, we think the U.S. milk supply is going to remain in fairly good shape.
Yeah, I mean, one of the things we always talk about here is it always takes longer than you think, right? And so while we can look at the screen and we can look at these forward-looking margins and say, wow, we're going to see deterioration in milk supply, that doesn't usually happen overnight, right? So even if it's not super strong growth, it could linger. Is that kind of what you're saying?
Absolutely, especially because a lot of producers deferred income into 2023. So even though it might look like they're getting pinched today, they're relying on cash that got carried over from last year into this year from a tax perspective.
So John, welcome. You're actually working with customers intensely day to day on managing risk and evaluating markets and strategies. What's your take on the current situation? Are people scared? Are they excited? Are they comfortable? Where do you think the average buyer in this marketplace is sitting today?
Well, yeah, thanks for having me, Phil. And I think there really is a sense of recency bias in the market, if you will. I know that's kind of a buzzword out in the markets these days, but we just came off of over $3 butter, and we came off of $1.80 non-fat, and we came off of $2.20 cheese. So as we get down into these levels, specifically in the non-fat side of things, this 120 area, it looks pretty darn cheap to a lot of people. I think people are willing to refill or restock the pipeline at these levels. And as far as the futures curve goes, people look out on the curve and say, well, I can buy non-fat in below $1.30 for most of the year. I think I'm willing to take a little bit of that risk off the table.
Yeah, one of the things I've heard you say, John, is that bull markets have long tails. I mean, that's kind of what we're seeing here today, right? Prices come down a little bit. People are like, hey, you know what? That ain't so bad. I'm going to restock. And then we get a little level or bounce, and then we see what happens from there.
Absolutely. And it's really part of that restocking and coming off of these big bull markets that every market goes through, right? Especially one that the curve inverted for so long, and it really paid people to bring their product forward. And I think they did, and we chewed through it. And now we've got to go in and rebuild that. But I think in general, we're all kind of in that struggle of trying to figure out, well, yeah, there is a lot of milk right now around the world, but if prices go too low, are we going to have enough milk, right? And then at what point are we going to have too little milk? So I think maybe the concern here is the lower we go in prices on the front end and the longer we stay there, it builds a case for a higher back end. If we're able to moderate prices here on the front end, maybe the back end doesn't have such the trajectory that people are concerned about.
And I would say our forecast, frankly, does anticipate milk volume deterioration, sparking some additional upside later. I mean, exactly to your point, that we're going to be maybe too cheap today for production sake, and we're going to pay the price later. Is there anything else out there, John, that's captured your interest?
As we look at it, we've been saying for so long, when China steps back in on the GDT, the market's going to go higher. And China did step back in, as we've seen on the last three auctions, and the markets really went lower. And I think the real reason for that is European prices have been under pressure for the last few months here and have taken a lot of prices into really low levels, that's a key competitor of ours in terms of if they're low, we're going to have a hard time exporting. I would say that there was a bit of a fire sale situation out there. And just in the last week or so, from an anecdotal standpoint, at least, speaking to people that deal out of Europe or with the Europeans, they would say that that European fire sale seems to have come to an end. So here in the short term, maybe there's a little bit of room for that price pressure that's been on the front end to pull up, and that might put a little bit of gas into the market here as we move forward over the next month or so.
Yeah, it's hard to have confidence in firming prices when Europe's going down 2% every week. So if that slide ends, maybe there's something we can build a base off of. One thing we're going to show you each month is our favorite take from our forecast update. Every month we're going to have 3 pages of sort of a hot topic or an interesting look on things. So this month, our favorite take is a map that shows recently listed dairy auctions. And by our count, we have about 24,000 cows for sale all of a sudden over the next 3 to 4 weeks at various auctions across the country. And people who we trust say there's even more coming in the pipeline. And so we're thinking about that U.S. milk production situation and profitability and where we're going. Thought it was really cool just to see some really sizable farms in the Southwest and West hitting the auction block here. And so we have a really cool map of that in this month's edition. That's it for this month's show. Thanks again to our fine panelists, Erica, Matt, and John. Thank you to Paige, our production wizard, and the other folks who contribute to the forecasting process here at Ever.Ag Insights, Bill Curley, Mark Majeros, and others. Thank you all for helping us get to this point. Thank you for watching. Please subscribe to the YouTube channel if you want to see more of this great content. And if you don't receive our forecast update and are interested in seeing how you can subscribe, get in touch. The contact information is on the screen.